Tether Holdings SAW, the issuer of the world's largest stablecoin, USDT, has strategically expanded its asset reserves by establishing a proprietary vault in Switzerland to store an $8 billion gold stockpile, positioning the company among the largest non-governmental gold holders globally with nearly 80 tons of gold. The vault's exact location remains undisclosed for security reasons. This move underscores Tether's commitment to diversifying its reserves, which include U.S. Treasuries and precious metals, with gold constituting approximately 5% of its reserves as per their March report. The decision to maintain its own vault, rather than using traditional precious metals vault operators, was driven by cost efficiency and security considerations. Tether's gold-backed token, XAUT, is directly redeemable for physical gold in Switzerland, providing a tangible asset option for investors amid growing economic uncertainties and concerns over potential currency devaluation. CEO Paulo Ardoino emphasized gold's perception as a safer asset compared to national currencies, especially amidst rising U.S. debt concerns. This strategic reserve diversification aligns with global trends, where central banks in BRICS countries are increasing their gold purchases, potentially influencing market sentiment and gold prices. Tether's actions may impact the stablecoin market, enhancing its appeal to investors seeking stability and positioning the company strategically within the evolving financial landscape.
Calamos Investments LLC has launched 3 new Bitcoin-focused structured alt protection ETFs, designed to offer investors exposure to Bitcoin with varying levels of downside protection and defined upside cap rates. These ETFs include the Calamos Bitcoin Structured Alt Protection ETF, CBOY, with 100% downside protection and a 10% cap rate, the Calamos Bitcoin 90 Series, CBXY, with 90% downside protection and a 24.7% cap rate, and the Calamos Bitcoin 80 Series, CBTY, with 80% downside protection and a 41.05% cap rate. This innovative approach allows investors to participate in Bitcoin's growth potential while mitigating risks associated with its volatility. The funds reset annually, providing a new cap rate and protection level for the subsequent year, and are managed by co-CIO Eli Pars and the Alternatives team. The introduction of these ETFs marks a significant development in bridging traditional finance with digital assets, offering a structured investment vehicle that appeals to those seeking both growth and risk management. The ETFs track the CBOE Bitcoin US ETF index over a 1-year outcome period and carry an annual expense ratio of 0.69%. Calamos' strategy of offering varying levels of protection and cap rates aims to cater to different investor risk appetites, potentially influencing market sentiment and attracting a broader range of investors to the cryptocurrency space. With over $40 billion in assets under management, Calamos continues to expand its portfolio, emphasizing innovative investment strategies that align with evolving market dynamics.
The U.S. Department of the Treasury's Office of Foreign Assets Control, OFAC, has imposed sanctions on a North Korean cyber actor and a Russian IT worker network as part of efforts to curb revenue generation for North Korea's weapons programs. The sanctions target Song Kum-hyok, a cyber actor linked to North Korea's Reconnaissance General Bureau, and Russian national Gay Kasatrian, who facilitated the employment of North Korean IT workers in Russia. These workers, often posing under false identities, secure jobs in various countries to funnel income back to North Korea, supporting its weapons and ballistic missile endeavors. The sanctions highlight the U.S. government's continued focus on disrupting North Korea's clandestine funding channels for its weapons development. By blocking the property and interests of the designated individuals and entities within the U.S., the Treasury aims to tighten financial constraints on North Korea's operations. This move underscores the broader geopolitical tensions and the ongoing efforts to enforce economic sanctions as a tool for international diplomacy and security. The immediate impact may lead to increased scrutiny of IT hires in sensitive sectors, especially those involving foreign nationals, as companies seek to avoid inadvertently supporting sanctioned activities.
Lucid Group's stock surged by 10.4% on Tuesday, outpacing the relatively flat performances of the S&P 500 and Nasdaq Composite. The luxury electric vehicle, EV, maker's impressive stock movement follows the announcement that its Grand Touring Air sedan set a new Guinness World Record for the longest drive on a single charge, achieving 1,205 kilometers. This milestone underscores Lucid's advanced battery and drivetrain technology, which are critical factors for consumers considering EV purchases. The achievement reinforces Lucid's market position in an increasingly competitive EV landscape, where range efficiency is a key differentiator. In addition to the world record, Lucid reported a significant increase in production and deliveries for the second quarter of 2025, producing 3,863 vehicles and delivering 3,309, marking a 38% year-over-year growth. This growth is largely attributed to the introduction of the Gravity SUV, which has garnered more consumer interest than the Air sedan. Despite these gains, challenges persist, as Gravity sales have not yet met the company's ambitious targets, and the broader EV market shows signs of slowing. The success of the Gravity SUV rollout is crucial for Lucid's turnaround efforts, as the company navigates through a competitive and evolving market.
Stock futures remained relatively stable as investors closely watched developments in President Donald Trump's tariff policy. The Dow Jones Industrial Average futures slipped marginally by 27 points, or 0.06%, while S&P 500 and Nasdaq 100 futures also showed slight declines. This cautious market response comes amid Trump's announcement of significant tariffs on 14 countries including Japan and South Korea, with new rates ranging from 25% to 40% set to take effect on August 1st. Additionally, Trump introduced a 50% levy on copper imports and hinted at potential future tariffs on pharmaceuticals, which could reach up to 200%. These aggressive trade measures underscore the ongoing volatility in global markets, as the White House continues to grapple with trade policy objectives. In parallel, investors are anticipating the release of the Federal Open Market Committee's minutes, which could offer insights into future monetary policy directions. As markets navigate these uncertainties, Goldman Sachs has highlighted stocks with strong dividend yields and growth potential as a strategic hedge against volatility. Notable mentions include Lowe's and NextEra Energy, which are favored for their consistent dividend growth. Meanwhile, Jeff Bezos' recent sale of nearly $666 million in Amazon shares, part of a broader divestment plan, has caught attention. Though he remains the largest shareholder with a substantial stake in the company, this sale aligns with Bezos' strategy to gradually reduce his holdings in Amazon, following his step down as CEO in 2021.
Tuesday's trading session witnessed significant stock movements among mega-cap and large-cap companies, with Chevron, NYSE CVX, and JP Morgan Chase, NYSE JPM, leading the pack. Chevron surged by 3.66%, buoyed by gains in the energy sector, while JP Morgan Chase saw a 3.22% decline following a downgrade by HSBC, despite a price target hike. The energy sector's positive momentum also lifted ExxonMobil NYSE XOM by 2.72%. Meanwhile, Tesla Motors, Nasdaq TSLA, rebounded by 2.57% after recent sell-offs, and Oracle Corp, NYSE ORCL, continued its upward trajectory with a 2.27% increase. In the large-cap space, Regencell Bioscience Holdings, RGC, soared 21.69%, marking significant gains in the biotech sector. Jabil Circuit, NYSE JBL, rose 9.62% on the back of a positive earnings report, while CoreWeave, CRWV, also posted a strong performance with a 9.79% increase. Conversely, First Solar Inc., Nasdaq FSLR, faced a steep decline of 18.12% amid challenges in the renewable energy market, and Make My Trip Limited, Nasdaq MMYT, fell by 8.7% following a convertible senior notes offering announcement. The mixed movements reflect varying investor sentiment across sectors, with energy stocks benefiting from rising oil prices and financials reacting to analyst ratings and economic indicators.
On Wednesday, July 9, 2025, financial markets are anticipating significant movements due to the release of key economic reports, notably the Federal Open Market Committee (FOMC) meeting minutes and the Energy Information Administration's EIA crude oil inventories report. The FOMC minutes, set for release at 2 p.m. Eastern Time, will offer detailed insights into the Federal Reserve's recent policy discussions, potentially influencing expectations regarding future interest rate decisions and the broader monetary policy stance. This information is crucial for investors as it can affect market sentiment, impacting stock and bond markets and the strength of the dollar. Earlier in the day at 10:30 a.m. Eastern Time, the EIA will release its crude oil inventories report, which reveals the weekly change in commercial crude oil held by U.S. firms. This data is vital for assessing petroleum price trends and inflationary pressures, as changes in oil inventories can indicate shifts in supply and demand dynamics. The report on Cushing oil inventories, a key benchmark for U.S. crude oil, will also be closely monitored for its implications on oil supply and pricing. These reports could significantly impact energy sector stocks and broader market sentiment, particularly given the current geopolitical tensions affecting oil prices. In addition to these primary events, other economic indicators will be released, including the Atlanta Fed's GDP Now forecast, predicting real GDP growth at 2.6%, and the 10-year note auction, which will provide insights into government debt conditions and investor appetite for U.S. Treasury securities. Updates on mortgage rates, mortgage applications, and housing market indices will also be in focus. Collectively, these data points offer a comprehensive view of the economic landscape, influencing trading strategies and market outlooks across equities, bonds, and commodities. Investors will be keenly observing these developments to adjust their portfolios in response to the evolving economic indicators and policy signals.
A class action lawsuit has been initiated against Red Cat Holdings, Inc., NASDAQ, RCAT, by Holzer & Holzer, LLC, a prominent securities litigation firm. The lawsuit claims that Red Cat Holdings made materially false or misleading statements regarding the production capacity of its Salt Lake City facility and the actual value of its SRR contract. These misrepresentations allegedly led to inflated public statements about the company's performance and prospects, affecting investors who purchased shares between March 18, 2022 and January 15, 2025. The legal proceedings could have significant implications for Red Cat Holdings, potentially affecting its stock price and investor confidence. Shareholders who experience substantial losses during the specified period are encouraged to join the lawsuit, with a deadline for lead plaintiff applications set for July 22, 2025. This case underscores the importance of transparency and accurate reporting in corporate communications, as well as the role of legal firms like Holzer & Holzer in addressing corporate misconduct and protecting investor interests.
A class action lawsuit has been filed against Krispy Kreme, Inc., NASDAQ, DNUT, alleging that the company made materially false or misleading statements about its business operations and prospects. The lawsuit, led by the securities litigation firm Holzer & Holzer, LLC, focuses on Krispy Kreme's partnership with McDonald's. It is claimed that following the initial marketing launch at McDonald's locations, demand for Krispy Kreme products declined significantly, negatively impacting sales and profitability. This downturn has reportedly led Krispy Kreme to halt its expansion into additional McDonald's locations. The legal action is aimed at investors who purchased Krispy Kreme shares between March 26, 2024 and May 7, 2025, and experienced substantial losses. These investors are encouraged to explore their legal options, with a deadline for lead plaintiff status set for July 15, 2025. The outcome of this lawsuit could significantly affect Krispy Kreme's stock price and market perception, potentially influencing the company's strategic decisions regarding partnerships and expansion plans. The case underscores the importance of transparent communication with investors and stakeholders, as the allegations and their possible financial and reputational repercussions could have lasting impacts.
The Economic and Financial Crimes Commission, EFCC, has launched an investigation after the Nigeria Customs Service, NCS, intercepted an individual, Ahmad Salisu, at Malamaminu Kano International Airport, attempting to smuggle undeclared foreign currencies. The seized amounts include $420,900, £5,825, and over 4 million CFA in various denominations. This incident underscores the ongoing efforts by Nigerian authorities to curb illegal financial activities, particularly those related to money laundering and smuggling. The suspects, including 2 individuals who were allegedly set to receive the funds, have been handed over to the EFCC for further investigation and potential prosecution. The collaboration between the EFCC and NCS highlights the Nigerian government's commitment to enforcing strict anti-money laundering and counterterrorism financing regulations. Such measures are crucial for maintaining the integrity of the nation's financial system and protecting it from illicit activities that could have broader economic implications. The case is expected to proceed to court following the completion of the investigation.